Welcome to this week's African Agri Overview. This week we'll be focusing on Kenya and the impact that banned imports of maize and wheat will have on prices across the region. All in this week's episode, so make sure to stay tuned. Hi, I'm Dr. Johnny van der Merwe and welcome to this episode of the African Agri Overview. Before we dive in, however, I'd like to encourage you to follow us on YouTube. By doing so, you'll gain access to regular insights into the agricultural markets of Africa. Our goal is to provide you with valuable information that can help you navigate the dynamic world of agriculture on the African continent. You can also contact our regular market analyst, Jacques Pinaar, for more detailed information and reports on African soft commodity markets. Looking abroad, Brent oil prices dropped sharply last week but rose again over the weekend, now trading on $87 per barrel due to the ongoing conflict in the Middle East. However, the initial lower prices last week were mostly driven by significantly lower global demand. The conflict on the Gaza Strip can keep oil prices on a higher level, however. But with that said, Jacques will now tell us more about the impact that banned imports of maize and wheat will have on prices across the region. Over to you, Jacques.
Good day and thanks for joining. During the past week, the Kenyan president banned maize and wheat imports with immediate effect. We therefore believe it is an opportune time to revisit the Kenyan maize market and add a few comments on the wheat market in that country. The reason given for the ban is to protect farmers from low prices. No timelines were given for the ban, but the president indicated imports will only be allowed once local produce is insufficient. Let's first look at the impact of an import ban on wheat. We start with a quick overview of the Kenyan wheat market. The pie chart indicates Kenya wheat production and imports. Kenya normally imports 85 to 90% of its wheat need from outside the African continent. Observers estimate Kenya's annual wheat demand at around 2.2 to 2.5 million tons and local production between 200 and 300,000 tons, an annual import need of around 2 million tons. Most of the local crop is harvested between June and October, so for this season, the majority of the local harvest is complete. Further, the government for many years has put a floor buying price in place for traders and millers to protect farmers from potential low import parity levels. Also, Kenya has a 10% import levy on all wheat imports. Given the measures in place to protect farmers from low imported wheat prices and the large import need, we are of the opinion the import ban announced the past week does not really serve a purpose. Kenya needs the wheat imports desperately. The maize import ban probably has more merit. The Kenyan long-range maize harvest, normally producing 80 to 90% of annual production, is probably 20 to 30% done and should be complete by late December. This graph indicates Nairobi maize price history the last 7 years. From June 2022 to July 2023, prices fluctuated between $450 and $530 a ton, record levels, driven by an above normal import need and relatively small crops in the usual import origins. See the blue circle. Since July, prices slipped 35% and now trading at $330 a ton delivered Nairobi. See the red circle. Farmers are not happy with current prices and only selling small volumes to cover immediate cash needs. Farmers are aware of concerns regarding expected El Niño rains that could make harvesting November-December in the North Rift Valley difficult, cause losses and increase quality risk, including aflatoxin contamination. Also, they are aware import parity from Tanzania to Nairobi and Mombasa is around $410 a ton. Observers indicate farmers are looking at 5,500 Kenya shillings per 90 kg bag or $412 per ton delivered Nairobi at this stage. See the yellow line. This graph illustrates our Kenya maize balance sheet since 2019 and our forecast for the 2023-24 season. Most of our Kenya contacts expect a 2023-24 crop of around 2.8 million tonnes compared to government projections of 3.6 million tonnes. Annual consumption estimates around 4 million tonnes, with a projected import need around 1.2 million tonnes. Market guess Kenya imports mainly from Tanzania and Uganda since June could be as high as 500 to 600,000 tonnes. From now until March-April 2024, Kenya should be self-sufficient, with the remainder of the shortfall being imported from April to September 2024. Question is, will the two usual non-GM import origins, namely Tanzania and Uganda, have sufficient exportable surpluses to meet the expected Kenya import need from quarter 2 2024? The Kenyan government during August gazetted a notice extending the deep-sea duty-free yellow maize import window to February 7, 2024. This would allow the feed industry to import yellow maize, permitting the subsequent release of white maize, normally destined for the feed industry, to the food industry. We assume this was cancelled through the president banning maize imports earlier in the week. Talk, a vessel carrying 25 to 30,000 tonnes of Ukrainian yellow maize, expected in Mombasa during the next week or so. Not sure how the government will handle this. What impact could the maize ban have on the maize industry in general? It is most likely to support prices in the short term. Subsequently, maize meal prices will probably be higher compared to maize imports being allowed. Instead of spreading imports over several months and benefiting from current low global prices, the majority of imports will be moved to a time of year when exportable surpluses in the usual import origins, namely Tanzania and Uganda, are generally low and prices relatively high. This could see Kenya prices back at $500 a tonne levels when imports are expected to resume quarter 2 2024 and subsequent higher maize meal prices. So, the question could be asked if it is beneficial longer term to ban imports short term in an effort to protect farmers from lower prices during harvest time and then be forced to potentially import increased volumes of expensive maize later on.
Thank you, Jacques, for sharing such valuable insights. For those seeking more detailed information and comprehensive reports on sub-Saharan African soft commodity markets, I encourage you to reach out to Jacques Pinaar. I'm Dr. Johnny van der Merwe, and thank you for watching.